Hi. We are in the era. We are in the time where the whole world is affected and adversely affected, severely affected by the COVID-19. Right. So the whole argument that places now, what after COVID-19? Right. I'm sure the world would mature. Things would change with time, and this virus's impact would also be over in times to come. So the whole perspective is, how should the businesses be looking at it? Okay. To my mind, I think the way the businesses operate today, they would certainly bring a fundamental change in their operations. Okay. A lot of cost cutting is expected. A lot of technological tools, analytical tools, data driven tools are expected to come, which means that there is a gradual shift from a people driven business to a technology driven business, right? Inherent costs of leasing, inherent costs of travel, etc., they would be gradually made redundant, or at least reduced considerably, is something which is expected post the COVID-19 era. Okay, so how should you be looking at it from a reporting perspective? What exactly happens, right, on all these frameworks? So I mean, the point is that yes, there is going to be a very different kind of way people would operate. So the whole argument lies, what are we doing on our reporting, what are we doing on our accounting, and how does it change, and what changes as a part of our preparation of the financial statements, right? A very clear perspective that I would like to kind of bring here is that with this era, whenever it ends, and all of us pray it ends sooner than later, we certainly expect that there would be a considerable change in the estimates made by the businesses, and believe me, businesses make a lot of assumptions about a lot of things, a lot of estimates about future, which could be, for example, with respect to the useful life of an asset. There could be a salvage value of an asset. There could be an estimate, for example, about your pension costs in the future. Okay, there could be, of course, estimates about your doubtful debts, and lots such things would start falling in place. So yes, when you are preparing your financial statements, this estimate would require a revisit, because of the expected changes in the way you are going to operate is inevitable around the businesses. So that is something which is an obvious immediate impact on your financial statements. There would be expected a considerable amount in the estimates that you made before, and what are you going to do now? Okay, this aspect of the pension cost automatically changes my actuarial assumptions, right? Because if I'm looking at changes in the way I operate with more tools than people, then certainly my expectation of number of people staying in the business can be very different from what it was so far. Okay, if I look at an important standard, which is impairment of assets, right? COVID-19 happens to be a very clear indicator of impairment, okay, for a lot of businesses, and especially looking at the tourism industry, the travel industry, the hospitality business, even considerably manufacturing companies, or even the real estate companies which had been into the leasing so far. So we do expect that yes, there is going to be a considerable impact on the value in use of those assets. So that's what is going to be a negative impact when you look at the application of the standard on impairment of assets. Okay, So this is something which you can see as an obvious outcome, right? And when we say impairment of assets, can't really get off with the impairment of financial assets either, right? Your receivables, your investments, very likely you would see a significant change in the defaults, and accordingly those possibilities of or probabilities of default they're going to look at in a different perspective, right? The one thing that you might want to just carry as a comfort is that while the value in use with respect to the future cash flows is going to be on towards the negative side, a decline in the interest rates can probably support you on really taking a hit entirely, or a very huge hit on your financial statements. The global markets, the banking companies world over, they are reducing the interest rate, so your cost of capital or the discount rate as expected here is slightly favorable from that perspective. Okay, but yes, the impairment of financial assets, your timing of those cash flows, that is likely to see, you know, a different route. So that is something which you would expect from time to come, you know, post COVID-19 era. Okay, so that is something which you probably want to kind of take into consideration while preparing your financial statements. Okay, I think another impact is about your probable tax assets which you bring in your financial statements today on those deferred tax assets in future. So if you see those recoverabilities not happening in time, and the quantum of losses that you can carry forward to offset against future profits, if that probability of those future profits gets pushed a bit farther because of the COVID-19, then you would see again an adverse impact in the calculation of these deferred tax assets in your financial statements again, right? In addition, when you look at all these perspectives, so my property, plant, equipments, my intangible assets are all covered through the changes in the useful life, or even for that matter they are likely to get impaired as well. So that is something which is a very negative perspective, which is going to be felt by the businesses and has to be brought forward. The actuarial assumptions would probably reduce the liabilities, right? So that is something which is well, I would say a positive impact on your financial statements or the cash flows. But since the actuarial assumptions changes are taken to the other comprehensive income, you don't really see a P&L advantage of that. Okay, in this case, the context of impairment of financial assets, again a hit is taken back on your P&L, so one has to be a bit more observant around that. I think one comfort some companies would have is look at the exchange rates. So if you are an importing nation and the other currency is is strengthening, so naturally you are going to take a hit, but if you're an exporter, then naturally it becomes very advantageous scenario. But said and done, if you already had hedged yourself against your exposure, so naturally what was appearing negative would start taking a positive side, and what appeared positive would of course take a dip as well. So you again want to kind of look into it. If you're doing hedge accounting already, then very likely you would see some very you know, a huge volatility around your numbers. Okay, within the financial assets, even if I say there is a set of you know, financial assets which are taken at fair value through P&L, very likely there is a huge volatility which is going to come to your P&L as well as the balance sheet. So one needs to be a bit more observant around all these things on looking at the preparation of financial statements. Of course, smaller organizations with all these lockdowns around, with all these challenges to operate, there's a question on the going concern assumption that cannot be excluded around all these parameters. So even that can be a question, and it is even more applicable to airlines companies around the world. Even those tourism companies, they're likely to face big issue with respect to proving that they're likely to meet this assumption of the going concern, right? So broadly, I'm sure COVID-19 is a clearly a negative perspective. We may not really say it for a few pharmaceutical businesses, so even to some extent the FMCG businesses, but broadly or at large, many businesses, many industries are going to face all these negative perspectives on the financial statements, right? Maybe to some extent with this reduction in the interest rates, your financial liabilities can see a positive picture if they are taken through FVTPL, but at large, that is something which is you expect to be an impact of the COVID-19 on the preparation of financial statements for the year and even for some time in future, right? So that is something which I wanted to bring here, and it's not really confined to any particular accounting principles or a gap framework, but it is to at large understand what is there and what are the things that we need to consider while we are bringing our financial statements on the closure, doing the finalization thereof, right? So that is something which I wanted to bring here. I wish you all good luck and a safe life. I'm sure that all of us are affected by this so COVID-19 issues around us. So just be healthy and take care of yourself, right? Bye bye. Take care.